let's go to the first panel of today, titled Promoting Pension Savings Through Financial Education and Financial Inclusion, New Tools. To discuss this issue, I would like to introduce our two panelists, David Tuesta, Director of Pinbox Solutions Singapore for Latin America, and Maria Teresa Silva, a specialist in the labor market division of the IDB. I will read their biographies, and then we will begin with the panel. David Tuesta Cardenas is Director of Pinbox Solutions Singapore, focused on the development of digital pensions in Latin America. He's also the president of the Private Competitiveness Council in Peru. In the academic field, he's the associate professor at the IE University in Madrid, and he is also an affiliated researcher at the Risk Center in the University of Barcelona. He has been Ministry of Economics and Finance at BBVA and CAF. He has led research projects at the IDB, OECD, and the World Bank. He has also served in the Peruvian government as a senior management of Osinermin and SUNAT. Since the 90s, he has been called upon by different governments as an expert in several economic reform processes. David is also a PhD in economics from the Pontificia Universidad Católica of Peru, and he's a master in economics in public affairs from the University of Minnesota in the United States. He has several books and research papers. Maria Teresa Silva Porto is a specialist at the labor market divisions of the IDB in Panama. Prior to this work, she worked as an economist at the IDB for Nicaragua and as a consultant for the bank's labor market division in Peru, where she coordinated the Retirement Savings Laboratory. She has a degree in economics from the Universidad de las Américas, Puebla, and she has a master's in public policy from Oxford at the United Kingdom. She has been an advisor to the Secretary of Labor and Social Welfare in Mexico and Director of Social Policy and Employment in the Coordination of Advisors for the President of Mexico. She has also worked in several international organizations such as ECLAC, the European Commission, and the German Cooperation for Development. I would like to offer the floor, first of all, to David Tuesta. You have the floor. Thank you very much for this invitation. It is a pleasure to share these few minutes with you to discuss financial inclusion, financial education, and how these can be relevant tools for the promotion of a greater participation in pension systems in Latin America. And from that viewpoint, it's very important to understand the context, the average context of the region. And I'm talking about an average because there are very extreme realities in each of our countries. And the key issue here that will cover the entire gamut of our pension systems is the issue of informality in the job market. This is a multidimensional problem. We could define this problem from the point of view of productivity. There are many countries which are lagging in productivity compared to other countries in the world. For example, the case of Peru, which is my country. And according to the conference boards, the labor productivity of Peru is 15% of the labor productivity in the United States. I think we are only above 3 or 4 countries in the world. And this is the reality in the region. And we also have good intentions reflected in our regulations. And they try to offer important benefits to our workers, but these good intentions not always provide good results because they leave behind many people who take part or who would like to take part in the labor system. So our pension systems limit a possibility of to participate in a continuous pension scheme, which is the ideal, continuous participation, continuous savings, because the state is not able to provide pensions for all. The basic pensions in our country, the social pensions, are very low. The fiscal capability of our countries is limited. But when it comes to informal jobs, we need to look for new solutions adapted to the traits of this employment or the way many Latin Americans work at present. And this is a very volatile market. Sometimes there's a lot of jobs, sometimes there are very few jobs, and it's very difficult to sell, quote unquote, this pension product for savings for these parts of the population because it's a product that is invisible. It's very difficult to have people save for their old age when we are 30 or 40 years away from reaching old age. So this is a very important challenge. And it is what we have tried to solve, to approach uh, in Pinbox Solutions. We have had experience working with several countries, particularly in Asia. Our intention is to try to promote these issues in the region. And this is the presentation I wanted to share today. And I will like to go to the PowerPoint.
The presentation is in English, although I will be speaking Spanish. I think it's quite self-explanatory. There are some messages that might help those who don't speak Spanish. We'll focus a bit on the approach to pensions in the region, especially emerging countries, and with a focus on Latin America. The important thing here is to try and define what Pinbox does. Pinbox is a tech platform. It's a white brand, let's say, that seeks to adapt or, so to speak, develop the necessary ecosystem for providing more pensions to those who are not within the traditional systems that are the ones that are mainly provided for in legislation in countries, the more formal systems, even though we have a vastly informal world. So we're trying to fill that gap. So the platform tries to combine digital economy tools with some others that have to do with behavioral economics. And the idea when we talk about building mass markets is that we have a clear, broad market of potential participants that need to start saving with a view to their retirement, but they're completely fragmented. There's no way in most countries to integrate that vast volume of individuals who could save for retirement, although it's a very low level of savings, that doesn't make it attractive to the main players in the financial system. So we try to create economies of scale through the platform, trying to bring on board the supply, those who might be interested in providing these financial systems. And by this, I don't mean just the private sector, also regulators themselves. In certain countries, they have actually drawn a line that has prevented participation. The only way for someone in the informal system, if they wanted to voluntarily save in the pension system, they can't do so because the only way to have voluntary savings in Peru is if you enter through the formal channel. So you need to first have contributed to the private pension system as a formal worker. And then if you're left out of the formal market, as is most often the case, then you can continue to save voluntarily. But if you haven't had that first entry, you can never have access to saving in the private pension system, and even less so in the case of the public scheme, the pay-as-you-go system. So that is also a goal, to try and have a dialogue with regulators and make them realize the need to be open in order to find new saving mechanisms. Sometimes government or the regulators say that they want to foster voluntary savings, but the regulations themselves lead to this not being the case. So I think that's an area for work. And at Pinbox, we also offer expertise and advisory services, and we deal with research. We try to raise awareness. We foster networking, like Red Plaque, across Latin America to get experts who have ideas to foster savings for retirement or with regard to financial inclusion. These are matters that I will refer to. This slide presents a summary of the platform. This is our first step. Step one, we try to create a marketplace in which we can bring together the different pieces of supply and demand through the platform. And things work differently in each country. What you can see here are different pieces of this potential ecosystem, and in each country, they may be pieced together differently. If you look at the left-hand side, you will see possible pieces or participants who might have an interest in providing solutions for savings or longer term insurance. You have banks, cooperatives, existing technological platforms, fintechs, insurers. These are aggregators. They may also be small cooperatives or associations of workers in certain markets, associations of fishermen. It might be a microfinance entity that already has some kind of credit relationship with the informal world or even MSMEs, and they might want to provide an additional layer of services, such as savings. They are in touch with workers in the agriculture sector or with migrant workers. There's a lot of migration going on in Latin America, or also the self-employed or platform workers. The case in point is Cabify or Uber. And they might also seek direct links through programs that also foster financial education and can help domestic workers, drivers, gardeners, and others. So we have that full array, and this is very closely linked to technological platforms such as WhatsApp, a platform that has helped us in Kenya and India, where Inbox works. In the case of India, work is done directly with the regulator that provides the complementary pension system in India. In Kenya, we work on voluntary savings through the financial system. We have a partner there, and we also try to work with the digital wallets that might exist. Platforms are set up differently in each country. You also work through cloud computing and can integrate with other existing platforms. In more digitalized countries, things work better. In the case of India or Kenya, India is well known. They have given a big boost to digitalization. Almost 100% of the population has a digital ID, so it's very easy to link up to the services automatically, more easily and quickly. And there are different apps that allow and APIs that link up to platforms of financial entities, payments platforms, and others. So at the end of the day, we aim to generate an ecosystem so as to start building the possibility of pensions being available to a much broader group. Of course, it's not that simple. It very much depends on pre-existing development. Regulators will often see to the scalability. We haven't found any magic solution. You know, pensions for the informal sector are not something that you can achieve overnight. Takeoff is sometimes a little slow. Take up is limited, but we are seeking alternatives on which to build other regulatory systems around the world. And so as to wrap up some ideas, I go back to WhatsApp, which is working quite nicely because rather than creating an additional app, since there's a wealth of apps on smartphones, and smartphones are available even in the informal sectors, it's better to work with a familiar app. We have seen this works already in the case of other services related to trade or interactions with some financial institutions. So we are also building this into the pension system through wallets, providing for automatic savings. I will give an example. And this also allows other business and regulatory models to join in. For example, through WhatsApp or even through the more traditional sort of telephones and phone lines, we may help clients join in. And there's also B2, B2C models for clients so as to offer not just pensions, but also to offer more opportunities to access other products and services in the businesses, which can make it much more appealing to offer these savings options. This is built into the platforms and is part of the gift a pension system that we will talk about in a while. Of course, we need to bolster all of this work in the field of financial literacy, and for several countries and partners we are working with, our idea is to help them help others to attain financial literacy. We have standardized approaches that are tailored to the culture and sort of messages that may best reach the target populations. And we design strategies accordingly through toolkits, for instance, with information on savings for pensions. We use comics, direct interaction. In fact, WhatsApp makes this possible. Could I ask for the second video, the one on WhatsApp? Could we please have that? It's very straightforward, just a minute and a half long, and it provides an overview of the way it's working in Kenya. Please let me know. It's not this one, it's actually the other one. If possible, I think I gave the wrong information. Thank you. We'll be sharing that soon. As I was saying, in terms of WhatsApp, it's very important to have the existing digital platforms integrated. You see, you get a greeting, you're asked what you need, you just key in the number. All of this is linked to the national identity system in the case of India or Kenya. So automatically, when the individual types in their ID number, the platform quickly identifies the individual and immediately provides full information according to that ID. They ask if the information is correct, what sort of product they would like, if they would like to save on a daily basis or once a week. They are asked how much they want to save, and all of this through WhatsApp. They even get a brief financial education introduction, and There's explanations as to why it would be important to save. They can also purchase life insurance, even with a small, relatively small amount. And they ask who the nominee would be for insurance, typically a relative. So you can provide the number of a relative who would be the insurance nominee. You get asked what the relationship is, if it's sister or other relative. Bahari is the product. Pinbox is the platform, it's the white brand for this project. Then you're asked how you would like to save. So this is a system that is working, and this is a way to engage and interact that can prove useful in advancing on pensions. And then there's gift of pension, which I mentioned earlier. If we could now go to the video, this you will find on our YouTube channel. It's a translation of the video. I'll just let the audio take over. Gift a pension. It's for workers doing regular work for households, such as domestic workers, caretakers, gardeners, drivers, among others. This runs on a technological platform and is being used in India and Kenya. It involves governments, regulators, and the private financial sector. Let's take a look at the problem and solution in Kenya. The Pinbox solution and the private financial system provide an inclusive approach to pensions. This is Rosa. She's 24 years old, lives in the countryside with her husband and children, but they're struggling to make ends meet. So Rosa decides to look for a job as a domestic worker. She will work hard, non-stop, day by day, and send most of her income to her family and children for them to have a better life than she has. After many years, and when Rosa is tired to go to work, she'll want to go back to rest at home. Rosa and her husband will be working on their own with no savings. They will not be able to make ends meet, and they will not be able to have a decent life. This needs to change, and it can be different. So you can hire Rosa as your domestic worker and tell her about the importance of saving. It just takes 5 minutes for her to be helped to open an account. So Rosa can save regularly so that when she needs to stop working, she can go back home, and with their husband, they will be able to continue working together. But as they will now have a pension, they will lead a decent life for the rest of their days. This could be the story of your own domestic worker, caretaker, driver, or gardener. Just 5 minutes of your time could change their lives, and you can make a change and give Rosa a pension. Her clock is ticking. There's not that much left now. I just wanted to say that we are working at Pinbox Solution on a book for all of Latin America called Innovating Pensions for the Self-Employed and Informal Workers in Latin America. Again, we try to bring on board the greatest experts on the matter so as to inform on what is being done, specifically in Latin America, in the field of pensions. This book will be published by the third quarter of this year, and we have brought on board several key actors from across the region. I think you will know them. There's the IDB team working on a specific chapter on the innovative approach for informal workers in the region. There's the World Bank, there's Gustavo De Marco, there's Sebastián Nieto from OECD, there's, of course, a whole lot, Diana Mejia, and there's the cases for Brazil, Colombia, Chile, also for Costa Rica, Mexico, Peru, and the Dominican Republic, the case of Uruguay, and how they're working to use VAT as well for pensions. There's also the case of some digital developments that have also taken place in the region, or the case of Pensumo in Spain, innovations in the behavioral field with Diego Valero, whom you also know, Nova, and Miles for Retirement, Pinbox. So this is basically what I wanted to share with you. I will also keep you posted on the evolution of this book and the events around it. I would like to thank you for the time you have given me. And of course, I'll be more than happy to answer any questions and keep actively in touch to see how we can improve financial inclusion and education and foster pensions for all so as to leave no one behind. Thank you very much. I'll now give the floor to Maria Teresa. Thank you very much, Paulina. It's a pleasure to see you and David as well. It's my pleasure to be here for this IOS 2022 session to present the results of the 6-year long work of the Laboratory for Savings. In 2018, in the sessions here in Panama and in Uruguay in 2019, I was able to present the design of some of the interventions we have implemented, but now we already have some great lessons, and it is indeed a pleasure to be with you. I would share my presentation. I hope you can see it.
Muy bien. Bueno, pues para avanzar, listo. Bueno, ustedes como reguladores de pensiones bien saben.
As pension regulators, you will know that less than half the workers in Latin America save for retirement. And this, as also noted by David in his presentation, is due to the major challenge we have in the region in terms of labor informality. And this is something that we especially see among low-income workers. Here's an example from Mexico and from Colombia, and we can see how the share of workers contributing to pensions increases as their income increases. And the graph shows that for all income levels, self-employed workers save much less than employed workers. This challenge has been compounded by the pandemic. For instance, the share of self-employed workers has increased in all of the region's countries. For example, in Colombia, the increase has been 40%. This is a figure for 2019, and it went up to 44% in 2021, and employed workers went from 49 to 47%. As we know, and as was shown on the previous slide, for the self-employed, it's harder to save. Yet another challenge that has been worsened by the pandemic has to do with the amounts that the workers have to fund their pensions. There has been a reduction in pension savings due to early withdrawals, as has been the case in Peru or in Chile, but we have also seen this in Mexico through the unemployment insurance scheme. Many workers have also withdrawn funds from their pension savings accounts. So there's, on the one hand, the structural challenges that we already face, which were aggravated by the pandemic's circumstances. What are the laboratory's conclusions in this situation? What we have seen in these last 6 years has been to introduce innovative solutions using technology and new tools provided by technology in order to be able to connect to the groups of workers that have been very much disconnected from formal savings. And again, behavioral economics, this hybrid field that includes economics and psychology can also help find ways to get workers and individuals to reach their goals. Often, when you ask workers or people if they would like to save, most people will say yes, but there are different forms of bias, such as failure to pay attention, the focus on the present rather than on the future, the optimism. These are barriers that prevent us from sticking to our savings intentions. As part of the traditional economy, you will see paternalistic policies on the one hand that oblige workers to save for retirement because we think that saving for old age is a good, desirable thing, so workers are obliged to do so. And then there's libertarianism, which says, okay, I provide information to people, people know what is best for them, so we leave it up to them to decide whether they do want to save or not. Interestingly, in the region, we see a mix of both. In most countries, we oblige workers that are employed to save for retirement. So we are paternalistic and deduct from their wages. And in the case of self-employed workers, we take a libertarian approach, leaving it up to them to decide whether they'll save or not. But for a few exceptions in which the self-employed are also required to save, as is the case in Colombia, which also partly explains what we saw on the previous slide, which compared Mexico and Colombia on the basis of income deciles. In Colombia, more and more self-employed workers are saving for retirement as compared to Mexico. Behavioral science provides an intermediate response framework as to the way we design decision architectures that favor savings. And an example of that kind of decisional architecture might be automatic savings, as part of which we automatically offer the registration as part of a saving scheme. So a percentage is deducted from their income, but workers are given an opt-out option. So it is a milder obligation than the more paternalistic one. And then there's again a softer form of intervention, the idea being to more actively remind workers and people that it's important to save. It's stronger than libertarianism, which basically refrains from doing anything, but at least we are dealing with the limited attention bias that might discourage people from continuing to save. The retirement savings laboratory interventions were related to the framework provided by behavioral sciences. We worked in Mexico, Peru, Chile, and Colombia, and we tried out 14 interventions, mainly using 4 kinds of tools. First, messages and reminders, also active subscription to direct debit, process streamlining and simplification, and some interventions were related to financial and retirement literacy. As you will see, the interventions that have the marks are 7. You will see the ones that have the little envelope. So these are interventions that revealed an impact in terms of the possibility of workers deciding to save more, in addition to the savings being higher than in the case of those who were not subject to these interventions. We had one intervention with unfinished results, and there were 6 for which we found no impact. Here again, it is very important to document things. Often we like to speak about the interventions that lead to an impact, but there's also a lot to be learned when looking at why some tools do not work in certain contexts or with regard to certain population groups. So as to build on that and find solutions that do help workers to save. Now I would like to present three types of interventions and three types of different tools accordingly, so as to illustrate the sort of work we have been doing. The first one is the tool of messages and reminders. This was the tool that we most use in the retirement savings lab.
Because nudges are, they are called in English, are easy to implement and to massify. We tried out tools such as Facebook, where we sent about 17 million impressions in Facebook with messages promoting savings. We sent 7 million text messages, 500,000 emails, 100,000 phone calls, and 6 million notifications through apps. These are called push messages. These are reminders sent through apps. In Colombia, we performed an intervention with the BEPS, which is a program launched by the government intended to help low-income workers and self-employed workers, help them to save for their old age. This is a very flexible scheme which allows people to save very small amounts, and they are not. It doesn't have to be with a certain periodicity. People save what they can whenever they can. However, in 2017, only 27% of those registered had made some kind of savings, and only 19% was saving on a regular basis. So, what we try to answer, the question we tried to answer was if these text messages can produce a voluntary savings customs. So we sent a group of BEPS registered individuals a series of consecutive messages with different contents, and they increased their savings vis-a-vis those that did not receive any messages. The increase was 14%. Those who received messages during a period of 10 months increased their savings in 9.3%, and those who received messages during 5 months increased their savings in 2.9%. So the first lesson is if you stop sending messages, people do not keep up with the same rhythm or the same rate of contribution to their savings account. However, in spite of the fact that this was a very cost-effective intervention because the cost of text messages is very low, the amount of savings produced is relatively low as well, only about $5 or $6 more than those who did not receive any type of message. Another important lesson is that this type of tool does not always work. In Mexico, for example, we tried out a system, a design of an intervention, which was practically identical, and we did not see an increase in savings in Afores. And it didn't have the same impact in the same context, and also not among the same groups of population. For example, these increases in savings have to do with those who are linked to BEPS and who had contributed at a certain point in time before. So this allows you to save more, to be more intensive in your savings, but those who did not save before were not positively affected. So that was the result we saw. And another intervention, another tool we tried out was active decision producing an automatic debit. What we tried to do here was to do something similar to what worked for wage laborers or salaried workers, which is the decision to accept an automatic debit from the source of income of the worker. So instead of having to think about contributing every month, you make a one time decision and then that debit is produced automatically. It's a challenge to find these sources of income for self employed workers. And we saw here that one way to group them was through demand on demand work platforms such as Cadify and Uber, and we partnered with Cadify so that the money received for each trip could be subject to a deduction to save in the long term. And this group of workers is used to perform digital transactions, so it's easier for them to do this and to choose the way they're going to save, etc. So there's a whole issue of digital uh, knowledge, and we saw that there was a higher potential with this group of workers. We offered two savings plans for these drivers. One of them was the savings plans for emergencies, and the alternative was to uh, save 2% of your weekly income. And the other group was offered a flexible and intelligent savings plan in which we offered an alternative to save 3% of the weekly wage, but only in good weeks. The idea here would be that self employed workers have very variable incomes, and if you have a good week in or a bad week in which your income was very low, it's more painful to have a debit deducted from your payroll to save. So we offered them three different thresholds, and they only saved in those weeks where their income was above that threshold. We talked to 3,348 drivers, and we divided them into two groups to offer them these savings plans. And 16% of the drivers registered to one of the two savings programs, and 18.2% registered for the savings for emergencies plan, which is the simpler plan. Premise we discussed with the team was that it was simpler to save 2% every week instead of having savings only when you go above a certain threshold. And the decision was not only whether I wanted to save or not, but you also had to decide on the threshold of income, and each additional step that you include in a program, it makes you attract less people, because this is what behavioral sciences says. And the automatic debit is sticky. The opt out rate was only 3.3%, which means that you keep saving by inertia. And up to early 2021, at least 71.6% of those registered had performed at least one automatic deposit in the program. And that savings account was also used by the worker for other deposits, for other contributions. about 62% of the registered drivers uh, made an additional deposit above and beyond uh, those done through Cadify. The third intervention had to do with financial education. And here we worked with the technical and professional institutions of Chile, implementing a workshop for financial education, which is called Save S- from Now On. And this is a very uh, educational tool with a series of videos. And that tool lasted for about 2 hours. And then you had an in person moderator to reinforce some of the key concepts regarding financial and savings education. In this area, we saw an impact in the rate of financial knowledge. This was a very soft intervention. It lasted 2 hours and a half with a series of educational tools. But we saw that those who did not go through the training had an average of correct answers of 4.6, whereas those who did go to the workshop had an average of 6.1% of correct answers. And this is related to with a greater trust in the savings system. The trust in the system increased about 10%. However, we later said, well, these were very young students. They were in the last year of technical education before going to the university or going to the labor market. So we wanted to know how much of this intervention was recalled 3 years later. And we observed that 3 years later, there was not a difference, an observable difference between the two groups of students. So if we talk about an impact dimension and an ease of implementation dimension, clearly interventions such as nudges and reminders are much easier to implement and scale up, but they have a lower impact in the generation of savings. On the other hand, interventions geared towards decision architecture are more difficult to scale and implement, but they do have a greater impact on savings. And the same applies regarding financial education and savings education. For example, this in situ workshop with young people was a tool where you had to have an in-person mentor, etc. But it did produce an impact regarding financial education. However, this is difficult to scale. You would have to think on the best way to deploy these tools with active workers, which is extremely important because these workers have to save for retirement and they have to understand how they choose the savings plan in which they want to take part. And they have to understand why it is important to save voluntarily. And other interventions that I did not describe, but for example, there were other courses for financial education in different commercial establishments in Mexico, where we just gave out some leaflets. However, this it does not increase financial education very much, although it is easy to scale up. So what we learned in the lab was that even though we had a great deal of effort to facilitate the savings effort by the workers, there are regulatory, technological, and market challenges that went beyond the work of the laboratory. And this is important because when it comes to regulatory issues, no country in the region allows for an automatic registration. There is no rule in any of the countries, at least to the end of the pilots. There was no country in the region which allowed automatic registration in these schemes. Another challenge is what David was saying about Peru. In order to save voluntarily, first you have to comply with mandatory savings. And if you do not save 10% of your income or your wages in a mandatory fund, you're not allowed to save voluntarily. So for many independent workers, this can be quite a challenge because 10% could seem to them like a lot of money. And there are also technological challenges. The level of technological adoption varies from one country to another, but in some countries there are many bureaucratic obstacles. There are many transactions that can only be performed in person. They cannot be done digitally. And this is combined with a market challenge. For example, in some countries, there are no aggregation systems. That is to say, there is no way to aggregate micro contributions. So, in some countries, the commission to collect those micro contributions is greater than the amount that the worker and the independent worker can save on on his own, on his or her own. So some of these solutions could have to do with aggregation systems like the PIMBOK system showed by David. In Mexico, for example, this is already done, but there is a way to aggregate micro contributions so that you build up these contributions and you only pay a fee for that block of contributions. So, what are the lessons learned? What were the great lessons of these lab work? I have four lessons. First of all, solutions linked to a source of income have a great impact in the generation of voluntary savings, but to scale them for a low income population of workers is quite a challenge. So, apart from on demand platforms, there is an issue of thinking how we can make people go into these schemes, especially freelance or independent workers, self-employed workers. Maybe it could be done through a large company, a company of suppliers, etc. But it is difficult to do. Second, the reminders are easy to scale and they're cost effective. However, their impact on savings for retirement is very small, and they don't always work. They could be part of the solution, but on their own, they will not contribute to face the great challenge we have before us. The third lesson is that to facilitate savings, we have to complement it with better financial and savings education. And I would like to reflect on the Gestas experience here. Gestas are some small stores we have in Mexico. In Mexico, there has been a great effort geared towards broadening the places where people can go to make these contributions, to make it very convenient. But to facilitate these contributions is not enough. It is a necessary but not sufficient condition. And one of the challenges we had here was that the small stores or the promoters uh, need to remind people once they get to the store that they can contribute to their savings there, but it's very difficult to sell what people don't understand. When we went to the small stores in the field, we realized that the persons in charge of these stores did not know how this worked. And if they don't understand, they can't explain it to people. So it's necessary to facilitate this, but we need to have a greater financial and savings education. The fourth lesson is that uh, voluntary savings require institutional leadership, allowing it to overcome regulatory obstacles and market failures that make it difficult to implement scalable and effective saving solutions. So this will not happen on its own. On the contrary, we need that all actors uh, be in favor of the revision of these rules, the streamlining of systems to make them more agile, and the correction of market failures. So, if we want to go with this voluntary savings pillar for all, we first need a regulation that is favorable to voluntary savings. And this implies limiting all these barriers. Uh, you need to save on the mandatory scheme before you go into voluntary savings. If you don't save 10%, you can't save another amount. And the framework should allow for automatic registration, active decisions at key points in time, and that is all very important. And uh, we also need to develop an inclusive long-term savings product. For example, during the pandemics, we saw that many workers did not have other sources of savings for emergencies. So there are innovative solutions, such as the one in the United Kingdom, where they have a tool called Frascos. Uh, it's like saving in the piggy bank at home. You have a digital tool and you label it emergency savings, and then you have another piggy bank where you place your retirement savings. So you have that, and then all debits will go into the emergency pot so that you can have that source of savings. And once this pot is full, all other contributions go into a long term savings scheme that is not liquid. So if there's a shock to your income, at that point in time, you can avail yourself of the emergency piggy bank. That is in the UK, and they also find it difficult for independent workers to save for their retirement. And if that is the case, we have to rethink the reality of the workers in our region. And third, technology to reach more people at a lower cost. That is also very important, and it's important to broaden the channels for savings. You have to go into remote areas of the country, but also within the cities themselves, you need an easier interaction and a more convenient interaction with savers. And it is also very important to lower transaction costs. So, with this, I end here. I would like to thank you. And of course, this was the result of the work of many colleagues who were working in these 14 interventions and allowed us to reach these lessons and share them with you.